Before the introduction, I would like to invite CA Pankaj Patni sir to share some few words.
जो है मतलब अपना जो आज का सब्जेक्ट है ज्ञान तृष्णा, द थर्स्ट ऑफ नॉलेज, तो सही मायने में अगर कोई जी रहा है तो सर है, क्योंकि मुझे याद है 2019 में जब अपनी नेशनल कॉन्फ्रेंस हुई थी बालाजी इंस्टीट्यूट में, तो वहां एक पार्टिसिपेंट बोल के ये आए थे बेंगलोर से, खास रजिस्ट्रेशन करके। वो हमारे वो टाइम के नेशनल कॉन्फ्रेंस के सब्जेक्ट ऐसे थे कि सर बोले कि भाई वो जो नॉलेज लेने के लिए ऑल द वे एज अ पार्टिसिपेंट, वो 2019 में हमारे पास पार्टिसिपेंट है और हमारा ये भाग्य है कि आज वो एक स्पीकर बोल के हमारे साथ में है। तो सर वेलकम फॉर यू। आप इंट्रोडक्शन।
May we have the introduction?
To the National Conference, Gyan Trishna. CA Naveen Khairwal is a specialist in direct taxes. He was co-opted member of Direct Tax Committee of ICAI, New Delhi for the year 2020-21. He is currently member of Central Taxes, Corporate Laws, GST Committee of Federation of Karnataka Chambers of Commerce and Industry, Bengaluru. He was a part of team nominated by Bangalore branch of SIRC of ICAI to represent before Honorable Justice R.V. Ishwar Committee for Simplification of Taxes. Coordinator and moderator of Jignasa one-day workshop on scrutiny, survey, summons, search and seizure. He is speakers at seminars organized by 47 branches of ICAI all over India as of today. He led the cricket team of Bangalore branch of SIRC of ICAI to national level cricket tournament organized by Pune branch at Pune Cricket for MIT 2015. He was the captain of the team which won the cricket tournament organized by KSCA along with Bangalore branch.
Forward for your session. The topic for the CA Naveen Khairwal ji session is issues in 45(4) and 9(b) and issues in immovable properties in sections like 50C, 43CA, 45(5)A, JDAs and etc.
Good afternoon to all the members assembled here post lunch. I am delighted to see that at least the auditorium is not empty post lunch. Post that sumptuous and delicious lunch. Chairman of Pimpri Chinchwad branch, Sri Sachin Bansal ji, Vice Chairman Pankaj Patni ji, Secretary Sarika Chaudiya, Vikasa Chairman Vaibhav Modi ji, I think these are all present. The topic for today's seminar would be issues in 45(4) and 9(b). Post this discussion, as and when I am invited again, I would be dwelling on my next topic, issues in 45(5)A, 43CA, joint development agreements, 43CA, etc., 50C, etc. These two are separate topics altogether. Now, what about this topic now? Taxation and exit of partners due to reconstitution of firm on dissolution, death or otherwise. Why is this section introduced? What is the background? Why was there necessity for the government to make an amendment, my dear friends? The earlier topic, earlier section 45(4) use the words dissolution or otherwise. Any damn rupee or any damn money or anything given to a partner on retirement, death, the dissolution, etc., the partner did not pay a single rupee of tax. Host of Supreme Court judgments, host of High Court judgment held the view. Therefore came this amendment in 21. Number 1, February 1st, when the budget came in 21, Madam made this as a retrospective amendment. Some senior chartered accountant was telling during lunch, February 1, 21 should be applicable in next year. What about the planning made between 1st of April till 21? I am sorry, sir. For them also 45(4) 9(b) will apply, has applied. If you haven't paid the tax, wait for next year, 148 notices will start coming. 148 notices are due for this. Another 2 years or so you will see that. Anyway, so what was my, first what I used to argue, section itself came into play only from 1st of February onwards. Budget was passed. Assent of the President. No question. It is a retrospective amendment applicable from 21-22 onwards. That is the first issue in that. Now why 45(4)? What is the amendment? What is the amendment in 9B? We will see. I will not go to the background. I will not go to the old case laws. We will straight away go into the section, and thereafter I want to ascertain views and issues of all members and legal tax planning, how to go about it. Now, let us come to the section per se. I want everybody in the auditorium to give your opinion, give your views. Everybody should understand every line of this provision. Now, my dear friends, 45(4) start like this. Notwithstanding anything contained in subsection 1, that means 45(1) is the general chargeability for capital gains. 45(4) overrides that. Notwithstanding anything contained in 45(1), where a specified person receives during the year, understand the word specified person, then the law is telling receives credit to the account of partner. We will discuss all the issues. Where a specified person receives during the year any money, this is 45(4), any money or capital asset, any money or capital asset or both from a specified entity. So I have learned 3 new words: specified person, specified entity. What are they receiving? Money or capital asset? Money or capital asset, fine. Then, when you are receiving, in what context you are receiving? In connection with, what is the meaning of the word in connection with? In connection with reconstitution of such specified entity. Mind the language, there is no dissolution here in 45(4). Please understand carefully, the word dissolution is missing in 45(4), but the word dissolution is there in 9B. So 45(4), specified person, okay? He is receiving from whom? Specified entity. What? Capital asset or money. When? In connection with reconstitution. What do you mean by reconstitution? We will discuss. But word dissolution is missing. Move forward. Then what will happen? Any profits or gains arising from such receipt by the specified person. Again the law is telling receipt. Receive, receipt. You are only crediting to the account of partner. I am giving you this, hints. Your mind should start churning. They are using the word receive, receipt. By whom? By specified person. Then it shall be chargeable to tax as income of such specified entity. Okay? Under the head capital gains, and shall be deemed to be the income of such specified entity of the previous year. Which year? In which that money or capital asset is received by specified person. Very good, sir. Very simple section. Who is specified person? Sir, this section will apply to AOP, BOI and partnership firm and LLP. So we will just talk about partner and firm, partnership firm, partner and firm. So specified person is whom? He is a partner. He shall receive from whom? From a partnership firm. What he will receive? Capital asset or money. Very good. Then in connection with what? Reconstitution. What do you mean by reconstitution? No questions, sir, of any confusion. Law is crystal clear. Reconstitution means only 3 limbs. 1, somebody is admitted. Somebody is admitted. Some partners are there existing. Somebody is admitted. Somebody retires. Somebody retires. Somebody is admitted. There are existing partners. Third situation, third limb is what? There is change in profit sharing ratio of all the partners or some of the partners. Only 3 types of reconstitution. I repeat again. Somebody is retired. Somebody is incoming partner, admitted. And profit sharing ratio in the partners. So there are only 3 types of reconstitution. Then any profits or gains arising from such receipt. Profits or gains. By whom? By specified person. Who is giving, sir? Capital asset money is given by specified entity to specified person. Who shall pay the tax? Not specified person. It is only specified entity. That specified person is receiving. Even though he is receiving, he will not pay tax. It is like your buyback of shares. 115 QA, QB, etc. Buyback of shares. Company itself will pay. Here the firm will pay tax. Firm will pay tax. Now we will see a very complicated section, nothing to worry. We will try to simplify. Rules are still more complicated. As we go through the section, we will also come to the rules. There is ample time. We will try to go through the rules also. Step by step, line by line, we will try to analyze. Yes, sir. Now this 45.4 is giving a simple formula. A is equal to B plus C minus D. Nothing to worry. It's a very simple formula for us chartered accountants to understand. A is equal to B plus C minus D. He is telling 45.4, calculate in this manner. Leave your logic aside. What is A? Capital gain. Is equal to B. What is B? Money. Value of money received by the partner. Plus C. What is C? Fair market value of capital asset received by the partner. Minus D. Very important. What is minus D? Capital standing to the credit of the partner on the date of reconstitution. A is equal to B plus C minus D. I repeat. A is capital gain is equal to B, value of money, plus C, value of fair market value. It is not guidance value. Please don't mistake. Don't tell me guidance value. Guidance value is one of the mode of fair market value. What is fair market value? Defined in the Act 222B. Fair market value is defined in the Act. Guidance value is almost akin to fair market value. It is not fair market value. Guidance value is one of the modes to ascertain fair market value. So A is equal to B plus C minus D. Minus D is what? Capital standing to the credit of the partner as on the date of reconstitution. So number one, prepare two balance sheets. Whenever there is admission, death, retirement, dissolution, prepare two balance sheets for heaven's sake. One is as on the date of reconstitution. Check the capital accounts. Check the capital accounts. Sir, A retired. Very good. What is his capital? Sir, 1 crore. How much have you given him? Sir, 2 crores. If you give 2 crores on that 1 crore, firm has to pay tax. Next question. Sir, what benefit I am getting? Firm will pay tax, sir. 1 crore. Maybe short-term capital asset, maybe long-term capital asset. Based on that formula, I pay tax. Suppose 1 crore is long-term capital asset, 20%. Suppose it is short-term capital asset, I pay 30%. What is the benefit to me? To whom? To the firm. That rules will tell. Rule 8AA, Rule 8AB. Rules are there. So we'll see what benefits they are going to get. Next. So this is the formula, sir. Suppose the value of A is negative. It was 1 crore. I paid him 80 lakhs. It is negative. Law is telling A is equal to B plus C minus D. If the result of the formula is a negative, ignore it. Ignore. 20 lakhs loss, you cannot tell firm there is loss. Please ignore. Section itself is telling. Okay, we'll move forward. We'll see all the issues, don't worry. Provided further balance in capital account of the specified person. Very important, sir. When you calculate that capital account, the D capital account, how to calculate? He's telling ignore 3 things. Revaluation, that capital has increased due to revaluation of any asset, ignore. Due to any self-generated asset, ignore. Due to other self-generated asset, ignore. Proviso is there. Voila has become clear. This is what they used to do in the earlier regime, 45.4. Now they are telling, provided further that the balance in capital account of the specified person. Who is that specified person? The person who is retiring, who is getting that amount, who is being admitted, etc. On reconstitution, that fellow is getting money on capital asset. That fellow's capital D, how do I calculate? Exclude revaluation, exclude value of self-generated asset, exclude value of self-generated goodwill. Then you calculate capital. That is given in proviso itself. No question of any interpretation. Next. They are giving the meaning. What do you mean by reconstitution? Reconstitution of the specified entity, specified person shall have the meaning assigned in 9B. 9B, what I discussed, meaning of reconstitution will come there also. Self-generated goodwill and self-generated asset is giving a simple meaning, which has been acquired without any cost. Self-generated goodwill or self-generated asset is an asset which has been acquired without spending a single rupee, without spending any cost for its purchase, and which has been generated obviously during the course of my business or profession. Explanation 2. Explanation 1 gave the meaning. Explanation 2 is telling, what is it telling? It is clarified. What they are clarifying? They are telling wherever a capital asset is received by a specified person from a specified entity, 45.4 will apply. Section 90 will also apply. If it is a case of a capital asset being received by a specified person, meaning a partner, law is telling, explanation 2 to 45.4 is telling, I will apply 9B, I will apply 45.4. Don't tell me I will pay tax on 45.4, I will not pay tax on 9B. Section explanation 2 is clear, sir. It starts itself in telling, for the removal of doubts, it is clarified when a capital asset received by a specified person from a specified entity in connection with reconstitution of specified entity. The provisions of this subsection, that means 45(4), shall operate in addition to provisions of 9(b) matterants, and taxation shall be worked out independently. Finished, sir. 45(4) is finished. 45(4) is finished. What 45(4) is telling? Number one, there should be specified person, specified entity. There is a firm, there is a partner. You are giving money, you are giving capital asset. When in connection with reconstitution, very good. How to calculate? A is equal to B plus C minus D. Over. What is A? Capital gain. What is B? Value of money. What is B? A is value of money. What is B? Value of fair market value of asset. Minus D, capital standing to the credit on the date of dissolution or your reconstitution, basically, not dissolution, because it's 45(4). Suppose A is negative, then they are telling ignore. Now issue. Start with issue. Mr. Bansal, Mr. Patni, and Mr. Manoj Kumar, 3 are partners. In the firm, what are there? There is land, there is cash, there is patent. Patent is a depreciable asset. Land is a non-depreciable asset. There is cash on it. There is jewelry. So Mr. Patni retires from the firm, is given jewelry. How will you value? Mr. Bansal retires from the firm. You are going to give him shares. How will you value? Mr. Manoj retires from the firm, is given land. How will you value? Law is using the word capital asset. Suppose it's, now we will just take as a capital asset. You are being given jewelry. Fair market value. Find out the fair market value of jewelry. You are being given patent. Patent is a depreciable asset. Is it a capital asset? Is it a capital asset? What do you mean by capital asset? 2 within bracket 14. Mr. Bansal is given an agricultural land. What is an agricultural land? 2 within bracket 14, subclass 3. What is a urban agricultural land? What is a rural agricultural land? This is the jurisdiction. I am standing inside the jurisdiction. I am standing inside jurisdiction. I go outside the jurisdiction from the boundary of the jurisdiction up to 2 kilometers, up to 6 kilometers, up to 8 kilometers. 10,000, 1 lakh, 10 lakh population. Rural agriculture land. If it's a rural agriculture land, Mr. Bansal is given rural agriculture land on retirement. Sorry, sir, it's not capital asset. If it's an urban agriculture land, it becomes a capital asset. So you have to be very careful. 2 within bracket 14(3), it satisfies the parameters. Yes, sir. Then it's exempt. You are out of it. Or you are within the jurisdiction of the municipality, etc. Then it's a capital asset. You are within the jurisdiction of municipality strictly as a crow flies. Now they are telling it shall be measured aerially, the distance. Anyway, these are all issues. Suppose you are given shares. How to value? Demat account, listed shares. Listed shares, you will get the value. What about unlisted shares? What to do, sir? What about unlisted? Penny stock all gone, sir. Forget it. Penny stock all gone to dogs. Supreme Court has come with judgment. Department also knows everything. Whatever has happened to penny stocks. Supreme Court also, they have given several judgments. It is all gone. I had an opportunity to sit with the person who raided Mumbai, who raided Mukesh Choksi. His name was Ramesh Narayan Parbat. He was the additional commissioner then. Now he was recently PCID in Ahmedabad also. I had an opportunity to discuss with him. That person raided Mukesh Choksi as additional commissioner during those days in Mumbai. Did fantastic work to how to find out penny stock. They discussed everything. How many layers were there? How many layering was there? So all this over a period of time we are caught. Now we are thinking, oh, I am happy. Penny stock only last how many years you can reopen? Up to 4 years, beyond 6 years. In the old regime of 147, up to 4 years, beyond 4 years, up to 6 years, beyond 6 years, up to 16 years in case of a resident in India having any foreign asset abroad, undisclosed asset abroad. Now in the new regime of 148, there are only up to 3 years, beyond 3 years. Up to 3 years, beyond 3 years. If they invoke ED, you had that session yesterday. You had that session yesterday, PMLA ED. They can go 10 years, 20 years, 30 years backwards. What will you do? Where is the limit? Anyway, that is a different topic altogether. So come to this now, 45(4) we'll see the issues, 9B we'll see, and then we'll see all the issues. Yes, sir. So here if you see, specified person receives any capital asset or money or both. Now suppose money is credited to their account. On retirement I am giving you 1 crore. I am only crediting to your account, then I will make you a loan creditor. Mr. Bansal, Sachin Bansal, 1 crore on retirement, your capital is 50 lakhs. Good. I am giving you 1 crore, 45/4 applicable. But I am not giving you money. You have become a creditor in my books of account. What is your opinion? He has not received. This year he will not receive. Next year he will not receive. 2 years he will not receive. 5th year you will tell. Now I will clear this entry. 5th year as a chartered accountant, what will you do? Will you apply 45/4, make the firm pay tax, or will you keep quiet? Tell me, sir. Yes, sir. What is your opinion? He is not paying in the year of reconstitution. 50 lakhs was his capital, sir. I gave him 1 crore. It is only lying as a loan. After 5 years, I will clear that balance. I will give him 1 crore only. Or it may become more along with interest. Will you apply 45/4 or 9B or not? What is the law is telling in connection with? So the department will tell, this year you escaped from tax. In the year in which you receive, I will apply 45/4. And they will make you pay tax. In the year of receipt, as rightly pointed out by your senior chartered accountant, in the year of receipt you have to pay tax. Department is not going to leave you. All these techniques will not work. Again, now, meaning of receipt, I have given that meaning. What is meaning of receipt, etc.? Received means actually get into their hands. So date of receipt. Now demat account for shares. Demat account is that date of receipt for listed shares and securities. Unlisted shares are not in demat. Therefore, what is the receipt? Transfer deed. For unlisted shares, there is a transfer deed. Along with the share certificate, you deliver. So that will become the date of receipt. I need the date of receipt. I need the date of reconstitution. Because I need to calculate 45/4. I need to calculate 9B. Transferee will sign the transfer deed, and he will lodge it with the investing company along with the share certificate. Now, movable property like jewelry, etc., jewelry, artistic work, bullion, etc., date of receipt. So actual delivery. When you are giving me the bullion, you are giving me the gold. Actual delivery, that is constructive delivery, will be the date of the receipt. Archaeological collection, drawing, painting, sculpture, works of art, etc. Now, what about immovable property, sir? I am only discussing date of receipt. What is immovable property? Date of immovable property. Mysore Minerals case, Supreme Court. Date, which date should be taken as date of receipt of immovable property? Whether date of receiving possession or date of registration? Is the question here. I gave property to Bansal sir. I gave property. He is enjoying that property. But it is not registered. There is no agreement. But he is enjoying that property. He is staying in that house. You retired, sir, happily. I gave you a property costing 1 crore, which is now FMV is 10 crores. I have not registered. Firm has not registered the property. So department will tell handing over of immovable property like your Mysore Minerals case. Even though you are the owner of the car, you are using the car, but car is not registered in your name. But you are using the car. Therefore, you could have claimed depreciation. Same principles of Supreme Court will apply in this case. You have taken the possession of property. Yes, you are using the property. So that date of receipt, I am going to tax you 9 crores. You cannot escape tax. Merely telling, I will never register for lifetime. That property what I gave to my outgoing partner, retiring partner, I will never register in my lifetime, sir. What will you do? So there may not be a way out. It appears that the date of receipt of possession of immovable property is the date of receipt, not the date of signing the deed or registration thereof. My dear friends, I can only give a view now. There may be my senior chartered accountants, other chartered accountants who might differ with the view. These are only views because this is a section which has just taken its birth. There is no case, it has not even gone to, not even taken up for scrutiny still. We don't know what the courts will take the view. I don't know in future what the courts will take the view. I can only give you my views. I can elicit your views. I can advise the government. This is a new section. Unknowingly, inadvertently, due to oversight, it will come into your practice and you will forget it. For example, 269 ST. You are all day in and day out, you are filling the returns of partners. Sir, 269 ST, amount of receipt, capital introduced by partner, more than 2 lakh rupees, firm will pay penalty of 100%. You have already introduced capital. I am not talking about 68, 69, 69, A, B, C, D. Partner has the source. He has filed the return. Don't tell me 68 cash credit, 69 unexplained investment, 69 ABCD, party stores, money, bullion, jewelry, 69C unexplained expenditure, 69D amount borrowed or repaid by only inconsequential section. These 6 sections, when invoked by the department, rate of tax is a huge. What is the rate of tax? 60% plus surcharge, 25% of tax. 25% of tax is 60, 15, 75 plus education says 4% plus penalty at 10% of tax, 10% of 60, 115 BAC. Tax is a mind-boggling, astounding rate of 85%. These sections are not bothered now. They are telling you introduce capital, you have got source. But inadvertently more than 2 lakhs received by the firm, cash account debit, credit capital account, 3 lakh rupees cash. Firm has to pay penalty 100% on 3 lakhs. Audit is done, signed, uploaded. Again, partner is withdrawing from the firm. Partner is withdrawing from the firm, more than 2 lakhs cash. Who are you to ask me? That is my capital, I withdraw. Share, I received share of profit, I got salary, I got interest on capital, I withdraw my capital. If you withdraw more than 2 lakhs in cash, 269 ST, violation in the hands of partner. Partner has to pay 100% penalty. Read with 271 DA. Be careful. Without your knowledge, father is giving gift to son. Oh my dear son, out of my love and affection, I am giving you gift 10 lakh rupees. I have got the source. Nirmala, Sitaraman and Modi are standing behind you. 269 ST penalty. So gift per se is exempt. Gift is not taxable, sir. Father and son, blood relative, all exempt. 269 ST will not spare you. So son, the recipient, has to pay penalty 100%. Without your knowledge, you would have done that. And you have uploaded all books of accounting scrutiny. The department has now built a software. I'm just sitting with the additional commissioner. They have built a software which will track how many times you have made adjustment in tally. What are the trail it will leave in tally. Client will come. Sir, tax is more. Why do you worry? Reduce closing stock. Sir, it is still more. Reduce still more. 3 times you reduced. Send the books of account, you are going to mail faceless assessment. Faceless assessment. So therefore, when you mail the books of accounts, then they are going to come to know there. The artificial intelligence team of department is very, very strong. In a search I went. Sitting with madam. How did you know all this? Just out of curiosity. How did you know? We deleted all the WhatsApp messages. No. We have our forensic team is so strong. We have recovered all the messages. So all the messages which should not be seen also will be seen. Plus all whatever there in WhatsApp. Everything is recovered by the department. So these are the times of practice, exciting times of practice. As you know, there is AAS, there is TAS, etc. This time when I filed the return, many of my clients I saw, these 3 bank accounts are there, not declared. Fine, I told, okay. All these years you did not show, you did not tell me, I also didn't know, you didn't tell me, I also didn't ask you, we did not show. Now it is appearing, you please show it, pay the tax. We incorporated all those accounts, what to do? The client did not inform. 3 accounts, 4 accounts, bank accounts, even SP interest don't miss. If you have missed that, file updated return, 139.8A. What is that updated return for? If December finishes this year, you cannot file a return on 1st of January. You can wish everybody Happy New Year. No work for taxation. 1st of January. Nothing you can do. Last date to file revised return for 23-24 is 31st of December. Unless extended now by government. 1st January you can wish everybody Happy New Year, Happy New Year. Nothing you can do for the client. What you can do is file only updated return. That too 139.8 updated return, they are in such hurry. 31st July or 30th September I don't file, they are telling pay penalty. Forget the interest, 234 ABC interest I am paying. Beyond July if I file a return, you are asking me penalty. So that is how the government, has amended all the provisions. 271 AAD. Have you heard of the section, my dear friends? 271 AAD. Falsification of books of account, what is the penalty? 100% penalty. Suppose you forget an income, anyway you pass false entries in books of account. All these fraudulent purchases, entries have taken ITC, etc. This was only to discourage these fraudulent entries of purchases. But indirectly it will hit all the false entries, fraudulent entries. There are 2 types. They are telling false entry and they are telling any income which has a bearing on statement of total income, you have left it out. So you took entry. The person who took entry will get 100% penalty. He took 1 crore purchases, he will pay penalty 1 crore purchases. I am not bothered. Down when you read, they say, the person who caused that first mentioned person to take such entry, it may be the accountant, maybe the chartered accountant, maybe the advocate, maybe the consultant. Even that fellow will pay 100% penalty. Please read 271 AAD. The client will tell, I don't know, this fellow only got me the entry. Anyway, you will be searched, 132(4) or 131 summons will be given, your statement will be recorded. And what will you tell? He will tell the genesis. Sir, my CA got it done or my accountant got it done. He gave me the entry. Anyway, I am dying, he will tell, let me take him also and take. So 100% penalty for the client, 100% penalty for the accountant or the chartered accountant or the consultant, etc. That section has come 271 AAD. Be careful. Anyway, so we are in 45(4) and 9B. So receipt of immobile property. Now, date of receipt of possession of immobile property is the date of receipt, not the date of signing the deed or registration thereof. Also the triggering event in 9B and 45(4) is not transfer of capital asset like in subsection 1, but it's receipt of capital asset. Law is telling again and again, receipt, not transfer. Now we'll see 9B. Let us see 9B. Yeah. What is 9B? Then we'll see all issues. What is 9B? Income on receipt of capital asset or stock in trade by specified person from specified entity. So here, the specified person is receiving capital asset or stock in trade. 9B. There 45(4), what was he receiving, sir? He was receiving only money on capital asset. Now this 9B is receiving stock in trade and capital asset. Let us go to the provision. Where a specified person receives during the previous year any capital asset or stock in trade or both from a specified entity in connection with dissolution or reconstitution. Now the word has come, sir, dissolution or reconstitution. In 45(4), there was only reconstitution. Now this 9B is telling in connection with dissolution or reconstitution. Then the specified entity shall be deemed to have transferred such capital asset. Now the word has come. Deemed to have transferred such capital asset or stock in trade or both to the specified person. Same, in the year in which capital asset or stock in trade is received by specified person. So sir, stock in trade is given, sir. Capital asset is given. 9B. Therefore, two sections will apply. 45(1) will apply for transfer of capital asset and 28 will apply for receipt of stock in trade. How to calculate? Take FMB. Please take the FMB. Now, 9B2 is telling any profits and gains from such deemed transfer of capital asset or stock in trade, how to tax it? Will be deemed to be the income. If it's a capital asset, it will be capital gain taxed in the hands of the specified person. Similarly, if it is a stock in trade, then it will be taxed as a business income in the hands of specified entity. Next, 9B3. For the purposes of this section, fair market value they are telling. Please calculate fair market value of capital asset or stock in trade when on the date of the receipt. It shall be deemed to be the full value of consideration. Next, 9B4 is telling any difficulty arises, I will refer the matter to board, who with the approval of central government will issue guidelines. 9B5 is telling every guideline issued by the board will be placed before the both houses of parliament. Now, they are giving the explanations, giving meaning of reconstitution. There are only this meaning, sir. Reconstitution means, as I told you, one or more members of the partners ceases to be partners, meaning to say they retire. Or one or more new partners are admitted, such that one or more of existing partners continue to remain in the firm. Or the third one says, either all the partners of such specified entity continue with change in their respective share or in shares of some of them. Specified entity, I told you, means a partnership when either in connection with reconstitution or in connection with dissolution. So here there are two partners in a firm, one partner dies. In the clause, you know what is written in the partnership deed? In the event of any death of a partner, his legal heir would continue to be a partner, etc. That is mentioned. But as rightly pointed out, even though such will come into play. 9B will come into play, sir. Next question, what I am telling, we will stretch that example. A dies, so B remains in the firm. What will happen? That fellow will become the proprietor. That fellow will become the proprietor. Is there a firm? When the fellow becomes a proprietor, is there a firm? All the assets and liabilities, by default, by law, will go to B. Example, suppose if there are no other partners, at least for one day, it will become a proprietary concern. Next day, that one more person will join legal heir. So what is your opinion? Well, there are two partners, one person dies. So on that day, when he dies, that becomes proprietorship. He says it is a dissolution. Movement is a dissolution. Next day, one more person will join, sir, in place of that partner, legal heir or any other partner. All that power is there. Once the partner dies, it becomes a dissolution. That is the risk you are carrying. If there are three partners, one person dies, no problem. Two persons are still there, firm continues. There is no problem, no dissolution. No retirement, no admission. And there is no change in profit sharing ratio, no problem. So this is a tricky situation. Board has to come with a circular. Board has to take up all these questions. Who is going to answer? So all these questions they have not thought of now. One booklet should come shortly, question and answers. Then we'll see other issues also. Now see one example, sir. Then we'll see further. Now this applicability of 9B. There is a firm ABC Associates. Okay. Distribution of capital assets, stock in trade. So what is date of dissolution? Date of dissolution is 1/4/2001. 1/4/2021. Distribution to partners is what? Immovable property. Stamp duty value is 15 lakhs given to A. Index cost of acquisition of immovable property is 8 lakhs. Stock in trade I am giving, FMV is 12 lakhs. Given to B, cost of purchase is 9 lakhs. I am giving shares, FMV is 10 lakhs given to C. Index cost of acquisition is 9 lakhs. This is the example. So there is a dissolution. I am talking about 9B. Distribution to partners, immovable property, stock in trade, shares. Everywhere stamp duty value is given. Now, what is the sale consideration? 9B first read with 45(1) and 48. If there is 9B, you are giving capital asset or stock in trade, two sections, 45(1) and 28. So first is sale consideration, that is FMV, sir, 15 lakhs, 10 lakhs. Immovable property and shares, they are capital assets. Index cost of acquisition 8 lakhs, 9 lakhs. Capital gain is how much? 7 lakhs and 1 lakh. Total capital gain is 8 lakhs. So therefore, how much tax to pay? 20%. Now, business, how to calculate 28? Sale consideration is 12 lakhs, less cost of purchase 9 lakhs, business income is 3 lakhs. Therefore, capital gain of 8 lakhs and business income of 3 lakhs will be chargeable to tax in the above case. 45(4) will not apply. Why? Because this is a dissolution. 45(4) what is there, sir? Only reconstitution. Whereas in 9B there is reconstitution plus dissolution. Now, see this. Now I want to go further. When there are remaining assets, etc., tax is paid, etc. Now we'll see the example, then go into the rules, because rules are very, very difficult to understand when you just read them. With an example, we can understand the rules very easily. Nothing to worry. There are only 3 rules. We'll take an example, then understand the rules. Don't worry. Yes, sir. Now following the balance sheet of firm FR having partners A, B, C with equal profit sharing ratio. Okay. Partners capital balances A, B and C. Now capital asset land. Land STU. There are only 3 lands. FMB is given 70, 70, 50. This is the cost, sir. 10, 10, 10. Okay. All 3 lands were acquired by the firm more than 2 years ago. More than 24 months. Thus these are long-term capital assets. Partner A wishes to exit from the firm. So partner A wants to exit. On his exit, the firm decides to give him 11 lakh money and land U to settle his capital balances. Index cost of acquisition of land U is 15 lakhs. Tax rate is 20%. Very important example, sir. Tax rate 20% on LDCG. So 9B what? You are writing capital assets, stock in trade, start applying 9B. It shall be deemed that the firm FR has transferred land U to partner A at FMV of 50 lakhs. Why, sir? Land, which one we are giving? Land U I am giving to partner. This is the FMV 50 lakhs. So that FMV is 50 lakhs. So 9B, what is that capital asset? FMV is 50 lakhs. Next, long-term capital gain, how to calculate? Fair market value of land U is 50, less index cost of acquisition. This is for income tax purpose only, 15. Long-term capital gain on deemed transfer of land U, 35. 20% of 35 is 7. No problem. Sir, now net book profit on sale of land U to be credited to partner's capital account. I did 9B. I have to come to 45.4. 45.4 means apply the formula. A is equal to B plus C minus D. How to apply? I have to calculate D, capital. So sale consideration of land you 50. See here, less book value of acquisition. This accounting profit, not income tax profit. Why? I am crediting profit in the books of account of the partner on the date of reconstitution. Therefore, I should not include cost of acquisition, index cost. I should include only as per the books. Book value 10. Book profit before tax is 40. Therefore, tax payable long-term capital gain, the 20% on 35, 7 rupees. Deduct that 40 minus 7, 33. Net profit to be shared in 1:1:1. Each capital of the partner will be credited with 11 lakhs because they are all equal. 1/3. Therefore, capital balance A, B, C. Add profit on sale of U of land. This book profit 11, 11, 11. Total capital balance 21, 21, 21. So, this fellow retired A, 21. What am I giving him? Settlement by way of cash and land. 11 lakhs cash I am giving him. I am giving a land whose fair market value is 50. Therefore 61. Excess settlement of money as compared to capital 40. What doubt you have, sir? Have you understood till now? Then only I will go. How to now apportion? What doubt you have? Have you understood the example? Please take a time, understand. What doubt you have? Have you understood the example? This I have applied the formula A is equal to B plus C minus D. I am calculating D. Why capital balances as given? Go back. See, this is the capital balances A, B, C. 10, 10, 10. So here I took 10, 10, 10. Add profit on sale of land U up to date of reconstitution. How did I get 11, sir? Come back. Sale consideration is 50 less cost of acquisition as per books. I am calculating accounting profit, not income tax profit. Therefore, 50 minus 10. Why 10? Go back. See here, sir. 50 land U, cost is 10 as per books. 50 minus 10. This is the accounting profit. So 50 minus 10, 40 rupees book profit before tax. Now capital gain I am going to pay 7 rupees. Tax payable on LTCG. How did I get 7? Come back. This is income tax profit. Long term gain. 50 minus index cost of acquisition. It is 15. 35. So 20% is 7. In the hands of the firm. So therefore tax payable on 7. Net profit to be shared in 1:1:1. 23 divided by 3. Any doubt, sir? So add profit is 11. A is equal to B plus C minus D. D I am calculating. Total capital is 21 as on the date of reconstitution. For 21 I am giving him 61. On 40 rupees, firm will pay tax now. Firm has to pay tax. Yes. Correct. The question she is asking therefore is, firm is giving the asset to partner. Why should firm pay tax? That is the basic question. Who is receiving that capital asset? Who is receiving the money? Who is receiving the stock in trade? Who is receiving the land? It is received by the partner. So, firm is paying the tax. This is the precisely like I told you, this buyback of shares. So now firm has to get benefit because you told firm has paid tax. So they pay tax on what? On 40 rupees firm has paid tax. So now the benefit will be given to the firm now. I will show you how in the rules. Exactly. It's a valid question. When partner is receiving the asset, why partner is not paying tax? Why should firm pay tax? The section precisely is brought with this intent, 45(4) and 9B, where the specified entity will pay tax when on the receipt by specified person of any cash, of any capital asset or any stock in trade. Now, as you rightly pointed out, 40 rupees I am paying tax. Excess money I gave. Plus I paid tax. I gave excess money. What is the benefit to the firm? Now we will discuss that. Any other doubt you have, sir? Understood the example or not first? Any other doubts, sir? All of you understood? Example? Pardon, sir? Very beautiful question. I understood, sir. He is asking nature of capital gain. How do you know it is short term? How do you know it is long term? How do you know it is short term? How do you know long term? Tell me. Pardon, sir? Books. He is telling holding period of the land. Because in the question what they gave? Held more than 24 months. Therefore they decided it is long term capital asset. Any other view, sir? Any other view? It is totally wrong view, sir. Because we have not read the rule still. When I come to rule, what is the rule telling? What is the rule telling? That land which you held for 24 months is long term is fine, sir. Rule is telling How to calculate short term, how to calculate long term is, what is the excess amount is 40. This excess amount paid shall be apportioned to what? To the remaining assets, to the remaining capital assets in the firm. What are the remaining capital assets? 2 lands. There were 3 lands, 1 given. 2 lands are remaining. When I am going to apportion this 40 rupees to the remaining assets, in the what ratio? In the ratio of the increase in revaluation of those 2 assets. I repeat again. I am not taking to the rule because you will get confused. Therefore, in simple wordings, I want to explain. Then I take to the rule. It is understandable, don't worry. Again, I repeat. Now, this 40 rupees will be allocated, apportioned to the remaining capital assets of the firm, not to stock in trade. This is only for capital asset. This will be apportioned to the remaining capital assets in the firm. In what ratio? In the ratio of the increase in revaluation of the remaining 2 assets of land here. Therefore, come back. Very simple, sir. Wait. Which 2 assets are remaining, sir? Please tell me. S&T. S&T are remaining. What is the increase in revaluation of these 2 assets? Sir, 70 and 70. That means what? 70 minus 10, 70 minus 10. Increase in revaluation. How much? 60 is to 60. Therefore, both are equal. Both are equal, sir. Now, what are the remaining assets? Remaining assets are long-term capital assets. Therefore, based on the rule which says the remaining assets, period of duration of that remaining assets is long-term. Therefore, you pay long-term capital gain. And where the remaining assets are depreciable asset, self-generated asset, self-generated goodwill, it is short-term capital asset, they say. Forget the duration. There may be a chartered accountant firm. Now, for example, Kishore is here. Senior partner is there. Firm is there from 40 years. There is self-generated goodwill. They are telling, I don't know. Is self-generated goodwill given to a partner on retirement? Pay tax as what? Short-term capital gain. Firm is there from 40 years. How to calculate goodwill? Whatever you want to calculate, I told you FMV you have to take. If you have to take FMV, you have to ask for valuation report. Without valuation report, don't even dream of doing 45(4) and 9B. Because he is asking not guidance value, he is asking you fair market value. If there is fair market value, put the valuation report on your table. Now his firm is there, sir. Self-generated goodwill is there. 40 years from, how to calculate goodwill? Who will calculate goodwill? I have valuation report. What is the basis? I got a valuation report. 40 years from, you are telling pay tax as short-term capital asset, short-term capital gain. I am sorry, but that is the law. That is the rule. So here now, when I come here, sir, 40. So 2020 I am going to apportion to both the lands. I am going to apportion 2020. You understood now? 2020 to both the lands. What is the benefit? Our question is still unanswered. What is the benefit you are giving me? In future, the firm has 2 lands. They will sell one of the land in future. Suppose they sell 1 land in future, 48.3 will come to the rescue. 48.3 says, whatever you added, that 20 rupees, you please reduce it from sale consideration in the year of sale. How to apportion means, don't apportion in the books of account. Put it as a note. Keep it as it is. You can't bring that in books, that 20 rupees. Put it as a note. After 10 years, the firm wants to sell that land. 2 lands are there. That land they want to sell after 20 years. Till 20 years, this will be there as a note. In the year of sale, this 20 rupees what the firm paid, they are telling that is like prepaid tax. So that you reduce from sale consideration of the remaining asset of land in the year of sale. This is what the rule says. Suppose this is a depreciable asset, patent. Then what will happen? He is telling the short-term capital gain. I give a damn. Suppose it's stock in trade. Then he is telling this 40 rupees. You are selling stock in trade. Sorry, that is not capital asset. You cannot apportion it all. Suppose the remaining assets of the firm, there are no lands. There is only stock in trade. Or there is only cash on hand. This 40 rupees will go waste. There is no revenue at all. How to apportion, allocate that 40 rupees in case there are no capital asset. This is only for capital asset, not stock in trade. Suppose there is only cash. Or suppose there is only, depreciable asset. There is no capital asset. Self-generated asset, self-generated goodwill, etc. Law is telling 30% for these three types of assets. And if there is no capital asset, forget it. You can't even allocate a portion, that 40 rupees goes waste. So that again we have to request the government, you find out a way. Firm has paid tax today. It is like prepaid advance tax. When you will allow me this? They are telling, have you got capital asset? In future you sold capital asset. Very good. Reduce it in 48.3 from the sale consideration, year of sale. Balance you pay tax. I have no problem. Because on that extent of 40 rupees you pay tax now only. It is like prepaid tax, advance tax. Now please see. The excess money as calculated above 40 lakhs shall be charged to tax on 45.4. Okay, 40 lakhs. A is equal to B plus C minus D. That is only that, 40 lakhs. This shall be in addition to amount of 35 lakhs charged to capital gain tax under 9B. I told you 9B, 45.4 both will apply. Okay. Now according to rule 8AB, how to apportion now? Now comes rule 8AB. 40 lakhs is attributed to remaining assets of the firm. What we discussed, remaining assets, 2 lands are there. On the basis of increase in their value due to revaluation. In our example, remaining assets S and T have their values increased by 60 lakhs each. Thus 40 lakhs will be attributed both S and T in the ratio of 60:60, that is 20 lakhs each. When these lands are sold in future, the above amount as attributed rupees 20 lakhs shall be reduced from sale consideration under 48.3. So 48.3 talks about only capital asset. Now we'll see the next example where you send patents. How to do? So this is the answer, sir. Any doubt you have here? This is just taken from the circular, sir. Circular has come, these examples they have given. Yes, sir. Pardon, sir?
This extra amount paid to the partner 40 lakhs.
You cannot add to land cost. You cannot add this to land in the books of account.
No.
And if it's a depreciable asset, you cannot add that to depreciable asset. Claim enhanced depreciation. Your land is not a depreciable asset. Suppose it was a depreciable asset, you cannot add 20 rupees to that asset and you increase the cost of the asset and claim enhanced depreciation. What is your doubt?
Extra amount paid.
You cannot add, sir.
Yes, yes.
You can only use that amount in the year of sale. Reduce it from the sale consideration. Yes, sir. Reduce from sale consideration. Because they are telling, now only you pay tax on 40 rupees. Sir, one beautiful question has come. Understand. 1 second. One beautiful question has come. What is he telling? You gave land to partner. Which land? You gave to partner? For partner, what is the step-up cost? Because firm paid tax. Whether the step-up cost is allowed to the partner? What is your opinion? Have you understood what is he telling? You pay tax on that profit, you pay tax on FMV of that land. So whether the partner will get the benefit of step-up cost on which the tax is paid by the firm? Very beautiful question. What is the answer, sir? Will you allow step? Suppose partner sells that land in future. Partner will sell that land in future. Whether he will take FMV as cost or whether he will take only cost as cost. See, for the partner, whether FMV is 50 rupees cost or 10 rupees is cost for partner when he sells the land in future. Pardon, sir? Logically, selling FMV you have to take. Firm paid the tax. Pardon, sir? Fortunately or unfortunately, there is no such clarification and no such rule. Choice is yours. As of today, there are two opinions. Both. Yes. There is no such rule or there is no such clarification or no such section. That 48.3 why I told, sir, to be reduced because 48.3 is that section is there. And that apportion attribution why I told, because there is rule, sub-rule is there, we will discuss that sub-rule now. That rule is there, so I told. Step-up cost, there is no rule at all. There is no section at all. Yes, what was your question, sir?
Very complicated.
Yeah.
Why would someone do this transaction and instead, if they know the partner has to be removed from the firm, 6 months prior also they can enter into such arrangement?
She is giving one more beautiful idea. She is telling what to do. Anyway, don't do reconstitution. Before that, I'll give the money to you. Give extra money. 2 crores is the lying in his capital account. He wants to retire. I'll give 3 crores. I'll give 3 crores today only. You retire after 6 months. So it's not in connection with the reconstitution. I gave you money today. You are retiring after 6 months. I didn't give you. Tax plan is given by here. There's a tax plan is given. It should hold good in court of law. Tax plan is telling you today only 3 crores you wanted to give. 2 crores is the cost of the land. FMB is 3 crores. I am giving you 3 crores. Where is the reconstitution? No admission, no death, no retirement, no dissolution, no reconstitution at all. As this I gave. Or one more way out is internal transfers by partner. Partners internal transfers. There are 3 partners. You know one of them will go out. Internal transfer, partner A, partner B will themselves internally in the partners capital ratio, you will transfer the amounts of capital. But without any reconstitution. So all this you have to work out ways and means, because tax rate is very high. 30% tax, 20% tax. Who is going to pay? All mid-sized firms. Partnership firm now we are doing this. They are all mid-sized firms. What about the land? Sir, land if you transfer before retirement, 56(2) within bracket 10. Recipient, anyhow fair market value, you have to pay tax, you cannot escape. 56(2) within bracket 10 has come now. Money only you can save. So tax planning further, higher and out.
Garpuj, that anti-avoidance provision will be triggered.
Beautiful sir, he is telling I will invoke GAR. I will invoke section 94 GAR. But GAR, you know, there is a net tax liability of 3 crores. He is telling you are doing all tax planning. I will invoke GAR. So GAR is still not, you know, used by officers as of today. Because the tax avoidance is a steep 3 crores. So wherever 3 crores is there, they can invoke GAR. They can invoke GAR. So be careful, all this. When you do tax planning, you have to take into account GAR also. Keep the tax planning below 3 crores. Yes sir, any other view? That's what I want you to read in between the lines. Pardon sir? Excess amount received by partner, yeah. Say, if it is 45(4), if it is money only, 45(4) means capital asset, capital gain.
There is no reconstitution, no dissolution. Like the tax planning, if a partner gets extra 1 crore, debit balance in the capital account.
Now, what is it telling? There are 2 issues. One is telling 45(4), you put that formula, A is equal to B plus C minus D. So, what is the rate of tax? If it's a capital asset, what is the rate of tax? Based on the duration, we discussed that. Tenure of the capital asset. One more beautiful question is, suppose it is debit balance. Suppose debit balance is there. If it is a debit balance, that means what? And you retire from the firm. So you were due to the firm, I didn't take anything from you. 1 crore I gave you before only. Tax planning you did, 1 crore you gave before only. But this fellow retired next year, the debit balance was as it is. Okay, you retire karke. You did not give me 1 crore, 1 crore waived. So indirectly as partner received, what is your opinion? Pardon sir? Taxable, not taxable?
As good as received by the partner, taxable.
As good as received by the partner, he says taxable. Again I am telling, receive in connection with reconstitution. Did you receive in connection with reconstitution? You received 1 year back. How to argue ways and means in tribunal? Scrutiny additional in CIT appeals out, faceless assessment. You cannot see his face, but you can definitely meet your people in tribunal. You can definitely make them understand. In connection with transfer, I will explain. In connection with reconstitution, when I gave the money, I gave 1 year back. Reconstitution took place today. Mahindra and Mahindra Supreme Court judgment is there, no? Waiver of loan, etc. Non-monetary consideration, etc. So all these issues will come. I can argue, sir, it is not in connection with the reconstitution. As I rightly pointed out, they may deem it is in connection with the reconstitution only. 1 year before you gave, and the time of reconstitution, you did not ask him that money. Therefore, indirectly, that fellow has benefited. I can argue, department will argue in this fashion, I will argue in this manner. You cannot recover the balance, it is his benefit. So anyway, these are all issues which are going to come in future. Now let us see a patent one example. What is this? Yeah. So 40 lakhs will be attributed, sir, that 20 lakhs each. When either of these lands are sold in future, the above amount as attributed to them 20 shall be reduced from sale consideration. Over. Now next. Amount of 40 lakhs which is charged to tax under 45(4) shall be charged as long-term capital gain in view of Rule 8AB. 8AB is telling, since the amount of 40 lakhs which is attributed to S&T, I told you, not the capital asset which is given. Tenure of the remaining assets you have to see whether they are capital asset. Long-term capital asset means long-term gain. Short-term capital asset means short-term gain. Which are both long-term at the time of 40 lakhs under 45(4). Pardon, sir? No asset in the balance sheet gone waste, sir. Then it is gone waste. That attribution gone waste. You pay a rate at the highest rate. We will pay at 30% only. If it is a self-generated asset, self-generated goodwill or depreciable asset. Other assets I will pay 20%. Now, we'll see this last example. Then floor is open for question answers. Following is balance sheet of firm FR ABC with equal profit sharing ratio. Sir, there is land, there is patent, there is cash. Last example. Then we will take all the questions, whatever you have in your mind. Sir, now land FMV is 45 lakhs, cost is 30 lakhs. Patent T, FMV is 60 lakhs. Amount is 45. WDV, this depreciable asset. Depreciable asset means section 50. Short-term capital gain. Section 43, 6C. Cash 225, total 300. Now, land was acquired by the firm more than 2 years ago. Therefore, it's long-term capital asset. Patent was acquired, developed, registered only 1 year back. Partner A wishes to exit. As per valuation report, there is also self-generated goodwill of 30 lakhs. Self-generated goodwill valuation report is there, 30 lakhs. On exit of partner A, what is it giving? Firm has decided to give him 75 lakh rupees in cash and land, yes, to settle his balances. Index cost of yes is 45 lakhs. First calculate 9B, then 45(4). So what is 9B? It shall be deemed that the firm FR has transferred land. What is 9B, sir? You are giving either capital asset or stock in trade. What are you giving? Land. What is the land, sir? Yes, 45 lakhs. So 45 lakhs under 9B. No doubt about it. Capital asset, capital gain. Next, therefore, long-term capital gain is what? 45. What is index cost of acquisition? 45 only, no, here. They are telling index cost of land, yes, is 45. Therefore, capital gain is nil here. Therefore, tax payable 20% nil. Long-term capital gain is nil. Because FMB less index cost of acquisition nil. 9B, no tax. Okay. Now come to 45(4). This exercise is carried out since 9B mandates that it is deemed that the firm FR has transferred land, yes, to the partner A. However, since the long-term capital gain as calculated is nil, there will be no capital gain on application of 9B. For partner A, the cost of acquisition of yes shall be taken at 45 lakhs. So here we are getting a hint. I am taking 45 lakhs only. FMB I am taking. The example is telling. Now, net profit on deemed transfer of land is to be credited to partner's capital account. A is equal to P plus C minus D. Fair market value of land 45, less book value is 30, book profit before tax 15, less tax payable on LTCG nil, net profit is shared 1:1:1 is 15. Capital of each of the partners will be credited is 5 lakhs. 3 partners, 5, 5, 5. So now capital I am calculating D, 100, 100, 100, add that book accounting profit 5, 5, 5, total capital balance 105, less settlement by way of cash 75, settlement by way of land is 45, excess of settlement money as compared to capital balance 50. So that step up cost you will get, sir. Don't worry, because FMB, I am giving the land at FMB to partner and firm has also paid tax. Partner got that at FMB only, valuation report is also there. So I will safely take a step up cost in hands of partner, nothing to worry. Now 75, 45, so excess of settlement money is 15 rupees. Now this 15 rupees I want to apportion, allocate. How do I allocate, apportion? What are the remaining assets, sir? Land is out. What are the remaining assets? Yes, sir, only patent and cash. Remaining assets are patent and cash. Now see how to calculate. Also you gave land and land is held for more than 24 months. Now they are telling pay tax at short-term capital gain. Unfortunate. These are lost to the firm. Very much unfortunate. Because what is the remaining asset? Only cash and patent. If you pay 20% tax, 148 notice will come. Land, I agree, sir. Land which are given to partner, sir, it is held for more than 24 months. It is a long-term capital asset. Unfortunately, law is telling what are the remaining assets. Sir, patent and cash. So what is patent nature, sir? Depreciable asset. Less than 1 year they told. It is short-term capital asset. So on that land capital gain, on 15 rupees, I would pay 30% tax. What injustice? Again, suppose other issues I'll come after this example, not to confuse in between. So this 15 rupees now, how to apportion, sir? 15 rupees. 15 rupees is attributed to the remaining assets of the firm, FR, on the basis of increase in their value due to revaluation of existing asset or due to recognition of value of self-generated goodwill based on valuation report of registered valuer. Sir, how many assets are there in the firm now, sir, remaining? One is patent, one is self-generated goodwill because of valuation report. Based on that increase in revaluation, based on that I have to recognize. In our example, the patent has increased by 15 lakhs, 45 minus 30, and self-generated goodwill value has been recognized at 30 lakhs. Therefore, how much, sir? 1:2, 15 is to 30. Okay, that 15 rupees I have to allocate in 1:2, 15 is to 30. Increase in revaluation of remaining assets. 15 lakhs will be attributed between patent and self-generated goodwill in the ratio of 15 is to 30 or 1:2. Therefore, 5 lakhs is attributed to patentee and 10 lakhs attributed to self-generated goodwill. Sir, that patentee, you cannot add 5 lakhs to patentee in the balance sheet and claim depreciation on enhanced value. That is forbidden in law. Next, amount of 15 lakhs which is to be charged as tax under 45(4), important, shall be charged to tax as short-term capital gain. As 5 rupees is attributed to the patentee, is a depreciable asset, and 10 rupees, 10 lakhs is attributed to self-generated goodwill. In accordance with sub-rule 5 of Rule 8AA, both of these are characterized as short-term capital asset. They are telling, I told you, wherever this sub-rule 5 of 8AA, what are they telling? Is it a depreciable asset? Is it self-generated goodwill? Is it self-generated asset? Yes, sir. Then it's short-term capital asset. Rule is telling. Next, 5 lakhs attributed to patentee shall not be added to block of assets, and no depreciation shall be available on the same. That I told you clearly. When patentee gets transferred subsequently, important now, patentee is sold in future, then 5 lakhs attributed shall be reduced from the full value of consideration, and the net value shall be considered for reduction from the written down value of intangible block under section 43(6) or for calculation of capital gain under section 50 of the Act. Now we'll see the example. No, we'll see that example, then we'll know. Let us say the patentee is sold for 25 lakhs in future. Then the net sale consideration to be taken is 20 lakhs, 25 minus 5, and 20 lakhs shall be considered for reduction from WDV of intangible block. Why it is 25 lakhs? Very simple, sir. Now this patentee, FMV is 60, this is 45. Now, 45 is WDV. On exit of partner A, firm 75 lakhs, etc. Then calculation. That 15. So 5 rupees is added. So 15. 1:1:1. 15 lakhs is attributed to remaining assets on the basis of increase in their value due to revaluation of existing capital. So patentee has increased by 15 lakhs. Why? 45 minus 60, sir. Increase in revaluation. 60 minus 15 is 15. Plus self-generated goodwill is how much? How much, sir? Self-generated goodwill? 30. Where is that? This is the earlier example. 30. So 15 is to 30 again. Where were we? Here. So 5 lakhs is attributed to patent shall not be added to block. When T gets transferred in future, 5 lakhs attributed shall be reduced from full value of consideration, and net value only shall be considered for reduction. Let us say patentee sold for 25 lakhs. They are telling a hypothetical example. Patentee sold for 20, then net sale consideration 25 minus 5, because attribution rules, minus 5 you reduce. Then 20 lakhs will be considered for reduction from WDV. when you sell a depreciable asset, less short-term capital gain and 43.6, less monies payable I have to reduce. So when I reduce that monies payable, how much should I reduce? Not 25. I sold for 25, but when I sell for 25, less that attributed value, minus 5, 20. So 20 I will reduce from monies payable. Similarly, when goodwill is sold subsequently, 10 lakh should be reduced from the sale consideration. What is attributable to goodwill? Under 48.3, note for the purpose of calculation of depreciation 32, WDV of block of intangible of which white and T is also a part would remain 45 lakhs and would not be increased to 60 due to revaluation during the year. What is your doubt? Discussion has finished 45.4.9b if you understand this example now. What is the doubt you have, sir, here? Very simple, sir. How much was left for attribution, sir? Only 15. That 15, what are they telling? You please apportion. How to apportion? How to allocate, sir? Remaining assets, you please see remaining assets, increase in their revaluation. What are the remaining assets? Patent is there. Self-generated goodwill is there. So what is patent? 65 minus 60 minus 45, 50. What is the increase in revaluation? And what is your goodwill? 30. So 1:2. So 5 rupees I apportion to patent, 10 rupees I apportion to goodwill. I sold patent for 25. You sold for 25, very good. How much can I reduce? 5 rupees, 20. So that 20 now, I will take that and reduce it in monies payable. Monies payable. When I sell an asset, that to depreciable asset, I will reduce in that block of assets concept. Similarly, when goodwill is sold subsequently, 10 lakhs only would be reduced from the sale consideration. What is attributable? Now, please understand these are the rules. Rule 8AA, Rule 8AA, what is it telling? Very important, sir. In case of amount which is chargeable to income tax as income of specified entity under 45(4), how to find out whether it is long term or short term? This rule is telling, sir. Rule 8AA, sub rule 5. Rule 8AA, sub rule 5. They are telling you it is 45(4), the amount or part of it shall be deemed to be of transfer of short term capital asset if it is attributable to capital asset which is short term at the time of taxation under 45(4), or it is a capital asset forming block of asset, forming part of block of asset, or the capital asset is self-generated asset or self-generated goodwill. Clearly it says it is short term. Or second is telling amount or part shall be deemed as transfer of long term if it is attributable to capital asset which is not covered by clause 1 by any of these 3 situations. Then it becomes long term. That's all. Rule is clear. When it is short term, capital asset which is short term at the time of taxation 45(4), or it's a capital asset forming part of block of asset, or it's a capital asset which is self-generated asset or self-generated goodwill. These 3 types of assets are short-term capital asset. Other than these 3 are all long-term capital assets. Now, these attribution rules that is given in Rule 8AB, Sub Rule 2, Sub Rule 3, Sub Rule 4. Matter ends. Discussion over. Attribution rules. Sir, now 48.3. What can be attributed? I am repeatedly telling you. Only capital asset remaining, that amount only can be attributed to capital asset, not to stock in trade. So therefore, Sub Rule 2 is telling what? Aggregate of value of money and fair market value of capital asset received by specified person from specified entity in excess of balance in capital account chargeable to tax 45(4) relates to revaluation of any capital asset or valuation of self-generated asset or self-generated goodwill of the specified entity. The amount attributable to capital asset remaining in specified entity for the purpose of clause 3 of 48 shall be the amount which bears to amount charged in subsection 4 of 45 the same proportion as the increase in or recognition of value of that asset because of revaluation or valuation bears to the aggregate of increase or in or recognition of value of all assets because of revaluation or valuation. What you understood? This sub rule 2. Very simple, sir, nothing to worry. In excess of balance in capital account, I calculated that A is equal to B plus C minus D. I found something excess. That something excess, what you found, you want to attribute. You want to bifurcate. You want to distribute. You want to apportion. You want to allocate. How to allocate? Remaining assets increase in the revaluation. That's all is sub rule 2. Come to sub rule 3. See, sub rule 3 is very important again. What are they telling sub rule 3? Where the aggregate of value of money and fair market value of capital asset received by specified person from the specified entity in excess of balance in capital account does not relate to revaluation of any capital asset or revaluation of self-generated asset or self-generated goodwill of the specified entity. Amount charged to tax under 45(4) shall not be attributed to any capital asset. He is telling that attribution will go waste when does not relate to valuation of any capital asset or valuation of self-generated asset or self-generated goodwill. That means that attribution, I will not do that attribution. That means what? You would have given only in that excess balance. Excess balance is what? Only cash may be there. If only cash is there, I cannot allocate that. I cannot attribute. I cannot distribute. Last one, sub rule 4. Notwithstanding anything contained in sub rule 2 or 3, why only in section notwithstanding should come? Even in rule we'll put notwithstanding. Where the aggregate of same value of money, fair market value, in excess of balance in capital account, charge to tax on 45(4) relate only to capital asset received by the specified person from specified entity. Amount charged to tax under subsection 4 of 45 shall not be attributed to any capital asset for the purposes of 48(3). Asset at cost only apart from cash or check. That means he's telling, I gave land at cost, I gave land, but 10 rupees cost in the balance sheet, I gave it 10 rupees only. But I gave cash of 1000 rupees. Therefore, it's telling to what to attribute? What to attribute? You understood? You gave asset at cost to cost, and there is only cash left. Therefore, also, I will not allow you to attribute what? That remaining asset here. Because whatever you gave, the remaining balance is only because of cash balance. That's all. Then they are telling, after doing all this exercise, you fill up one form. Income tax means compliance. You did all this 9B, 45(4). Now fill up one form 5C. Everything online. You have to fill up that form, inform the government, they will pick up the case for scrutiny and process will start. Same process will start. Fill up that form 5C. You filled up the trust form. 49 clauses, 32 clauses. Most intelligent government. 49 clauses you want to fill. Form 3CD itself there are 44 clauses. In now form 10A or 10A, your 10A, how many clauses are there? 49 clauses are there. You took a portion of ITR-V, ITR-7, you put everything in my audit report. You took half of that ITR-7, what was client used to sign, ITR-7, trust used to sign. Now what they did? Even in Form 3CD there are 44 clauses. They put 49 clauses now. By taking that ITR-7, half of it they have put in this audit report. I have to sign now. That is my liability now. All the clauses of the trust. Half of the form replicated as it is. You have become very clever now. So therefore 11, 12, 13 sections you have to be very careful, sir. Anyway, different matter altogether. So form 5C, you please fill up 139(1), etc. So all these things are there. Name of specified entity, PAN, assessment year, what is tax under 45(4), etc. How to attribute, what is the attribution of amount to capital assets remaining. See, capital asset name, whether self-generated, book value, revalued amount attributed, short term, long term. Based on the valuation report, go on filling that form. I, son of so and so, solemnly declare that to the best of my knowledge and belief, information given in the form is correct and complete, in accordance with provisions of Income Tax Act. I further declare that I am furnishing the form in my capacity as I am also competent to furnish this form and verify it. I am holding permanent account number. Form 5C. Over. Discussion ends. What is your doubt? Firm has got 1 crore loss. One issue I will raise before closing. Firm has got 1 crore loss. Partner retired, reconstruction. You gave him 50 lakhs or whatever. What about the loss, sir? What is your opinion? Firm is having 1 crore loss. Partner retired. I gave him 50 lakhs extra capital. 1 crore was his capital. I gave 1.5 crores. I am paying tax 45(4). Shall I pay tax or that 1 crore brought forward loss is there? Can I set off? What is your opinion? Brought forward loss in the case of the firm. Yes, sir.
Proportionate loss is allowed.
Proportionate loss, very good. He is rating of 78(1). Section 78, subsection 1. Share of loss of retiring partner or deceased partner. You forget that. Balance you allow. Balance you claim. Balance you carry forward. 189, See, now we are least bothered. In the olden days of practice, senior professionals are there. Whenever there was a reconstitution in the firm, we had to attach one partnership deed, write a letter to the department and file it in the department. Otherwise, they would have considered my firm as AOP. Olden days. That 189 is telling what? Even if a firm is dissolved, it shall continue for the purposes of assessment, it will be alive. So that is one other issue I thought, loss of the firm. So 48.3 is ready, sir. It only talks about 45.4. It does not talk about 9B. 48.3 says what? Income chargeable under that capital gain shall be computed by deducting from full value of consideration as a result of transfer of capital asset. Following amount, namely in case of value of money or capital asset received by a specified person from a specified entity, referred to in 45.4, amount chargeable to income tax as income, which is attributable to capital asset being transferred, calculated in prescribed manner. Prescribed manner is that rules. So can I invoke this 43C, etc., sir? 50C, 43C, etc., 56 to 10, etc. Distribution of asset to partner. He is telling already this is deeming fiction. You want to introduce one more deeming fiction. Fiction upon fiction. Law is telling this is not possible. Anyway, you are paying tax at fair market value only. Sir, 54EC. There is capital gain. 54EC, can I claim? Can I claim exemption? First of all, I gave extra money to partner. You partner, you enjoyed, I paid tax also. On top of that, I have to invest in bonds, 54EC bonds. To claim deduction or exemption, you can invest, why not? It is paying tax as capital gain only, no 45.4. It is a capital asset. I am paying tax under capital gains. If it is a long-term capital gain, 54EC, what is the time limit, sir, for investment?
6 months.
6 months from the date of sale or whatever. Therefore, he is telling you invest in bonds, claim deduction. One more opinion. But the firm has to invest, not the partner. Then again, lock-in period, 5 years. Converted into a company. Partnership firm is converted into a company. Will 45.4 or 9 be applied? What is your opinion? Chapter 21 of Companies Act 13 may not result in reconstitution. Partners, section 9B would not be attracted. The shares issued to partners should be as per rule 11U and 11UA of IT rules 62, so as to not attract any addition in the hands of partners under section 56(2)10. So all this churning will happen, thought process will happen. Everywhere you will come 9B, 45.4, 9B, 45.4, what to do with it? Any questions, sir, on 9B, 45.4?
Sir, in case of firm, the capital balance of the partner is 90 lakhs and the stock transferred to him is 1 CR.
1 CR.
Then what would be the
9B, sir, 1 crore minus 10 lakhs, 9B, it will be business income, 28, section 28. On 10 lakhs, you have to pay tax income from business. Income from business. See, 9B is what, sir? It is either stock in trade or capital asset. So when I give capital asset, I have to apply provisions of 45. And when I give stock in trade, I have to apply provisions of section 28. So section 28 I will apply in case of 9B, fair market value of stock, less cost of stock. 1 crore minus 90 lakhs, 10 lakhs. On 10 lakhs, the firm will pay tax.
90 lakhs is the capital balance and the cost of stock is around say 50 lakhs.
50 lakhs is the cost of stock.
And 90 lakhs is the capital balance.
No. See, 50 lakhs is cost of stock. What is the fair market value of stock?
1 CR.
1 CR minus 90 lakhs. 1 CR minus 90 lakhs is how much, sir? Their full value of consideration, fair market value of consideration. Not capital balance, I am not comparing there. 1 crore FMV less how much? Stock is how much?
Cost is 50.
Cost is 50. So 1 crore minus 50. On 50 lakhs, you have to pay tax. What else you have, sir? Unfortunately, that capital asset definition is given A is equal to B plus C minus D. I cannot go beyond that. They are telling calculate this manner only, 45.4. I can't do anything. Yes, sir. Remaining assets, he's telling one is land, one is depreciable asset. What is land? He's telling that is long term. And depreciable asset is anyway short term. So how to pay tax? Is long term or short term? Both. Proportionate. Pardon, sir? Proportionate value. FMV. FMV are divided into proportionately in depreciable as well as this. For that we have to bring one more rule, sir. There are only 3 rules: sub-rule 2, sub-rule 3, sub-rule 4. If you want to be safe from the department, you pay 30% tax and keep quiet. Because you have to fill up for 5C also you have to upload. 5C you have to upload. All the solemnly swear, oath, all that is there. But a very good question. They have to come out with all these booklet answers. Yes, sir. Sir, intent was because thank the audience for sitting patiently, despite there being India-South Africa match. And I would be failing in my duty if I don't thank the chairman, because he called up in the morning, 3 of his friends came and they took me to this famous Dabru said, Alvai Ganapati temple. I had the blessings of Lord. Within 5 minutes, due to his good officers, I had the darshan. So I am grateful to him. I am also grateful to the audience for having tolerated me for 1.5 hours. Thank you very much.
Shailesh Bore, Treasurer, to propose vote of thanks for this session.
Thank you, sir, for this wonderful session. In the words of Albert Einstein, the only source of knowledge is experience. Our collective experiences and expertise are what have brought us together today. I extend my heartfelt gratitude to our esteemed speaker, who has come all the way from Bangalore to share his expertise and experience with us all. As we are navigating the ever-evolving landscape of taxation, the guidance you have shared today will undoubtedly prove valuable in our professional journey. Thank you, sir. Thank you very much.
Federal Council member of ICAI, who is going to do online opening remark by video conferencing. He will address the participant through video conferencing as he is not well, so he is not present here between us, but then definitely his presence will be felt through the video.
Good evening very much to all the members of the Chinchwad branch, Chairman Sachin Bansal, Pankaj Patti, the Vice Chairman, other committee members. It's immense pleasure to be amongst you. At the outset, my apology for not being able to attend today's session in Chinchwad branch. And I thank you, the speaker who had addressed the international tax topic today, which I was supposed to address. Actually, I was not, I just yesterday morning from USA, when I came for attending a conference on international tax, which is organized by International Fiscal Association, which is the single largest body, which discusses a lot of topics on the international taxation. So, when I spoke to Chairman and because of the time differences and I could not sleep, I could not very well and therefore I could not be over there. But I thought I would just address certain thoughts, maybe another 5 or 10 minutes if I get on this topic. Then certainly said I will put you on the Zoom so you can address the audiences. I believe already a distinct detailed delegation has been done by the speaker on this international taxation. Of course, my presentation was already ready. What I will do is I will also the presentation for the benefit of all the participants. I would share that with the chairman so he can circulate among all the participants those presentations. See, the idea behind coming to a topic of international taxation very briefly, as what I had proposed was earlier that let's cover it from the basics, because it's very important that for a practicing chartered accountant or the members who are in the industry also today, the importance of international taxation is very important today. It has gone up like anything. To know what is happening in the states where the international taxation is done. If you compare the cross-border transactions which are happening today from a corporate angle also, there is a maximum rise which is happening. India is in such a position that the cross-border transactions has gone up multi-fold. And when the cross-border transactions goes to it, obviously the implications of international tax comes to it. And once the implications of the international taxation has come in, obviously I think so chartered accountant who is the professional who is exposed in the direct tax and also who an expertise into an international taxation and can be a very great advisor and to the corporates and also for a small taxation why it is important. Even for deciding by filing the return of an individual, maybe an employee, and the person who is employed abroad or is employed with some multinational company situated abroad, but he is actually performing services remote location. You would be aware that after COVID, there are the employees employed by the multinational situated abroad, having jurisdiction abroad. So they are not a resident of India, but India has come. Situated in India, services are actually performed in India remotely. So they are, though they are performing services for foreign companies, but they are actually executed in India. So a lot of issues are arising that what would be the tax implication on such a salaried person. The tax in India, or the tax by the foreign company, because ultimately the expenditure is borne by the foreign company. They are giving deductions from the income which is otherwise taxable in some foreign jurisdiction. So let's take an example. The company which is situated in Mumbai has employed a particular person who is situated in Mumbai and his services are provided in Mumbai or Pune. So he is working remotely through a system. The question that arises is if now there is a corporate tax in India, 9%. So let's take an example. If they are paying their salary to an individual in India for the services performed by that individual in India, but the beneficiary of those services of those employee services is ultimately company which has a jurisdiction into it. The question that arises is whether that would be tax deductible in the first place, number one. Number two, if it is tax deductible in UAE, whether it would be taxable in the hands of a salaried person in India, which have come up, especially in the areas of which we have been discussing also, and one discussion that how such taxation should take place, because the ultimate expenditure deduction is being targeted by a foreign jurisdiction. So whether those salaries should be taxed in the foreign jurisdiction, obviously the person, for an example, situated in India, Indian domestic law would say that the services have been provided over here, and therefore income GST to accrue or arise in India, and therefore it should be taxed in India. So there are many such areas which paradigm shift is going to happen in international taxation. So my suggestion to the members would be that they should be updated on this aspect. Let us take an example which we encounter on a day in India, which is the issuance of 15CB certificate, which is purely a domain of a chartered accountant. When you talk about issuance of 15CB, this is not purely a remittance certificate. Actually, you are giving an opinion on applicability of withholding tax. And once you are giving an opinion on withholding tax, obviously, you have to be aware of the provisions of Section 9, which deals with income that is deemed to accrue or arise in India. You have to be aware of the provisions of CCAA, depending upon to the country in which the remittance is happening. The beneficiary is situated in the jurisdiction of the recipient company. What is this? Based on that, you will have to take the call whether there is a DTAA available with those countries. If it is available, I'm sure all the members will have to look into it. What is the technical formula that is being issued by the chartered accountant without actually? Whereas my suggestion, my request to all the members would be that the CE certificate should not be issued in a summarily manner. It should be need to look into it. All the agreements which you have relying upon. If there is an invoice for the revenue, we need to look into it. Based on that, we need to decide upon the taxability of the transaction. If the taxability of that transaction occurs in India, then obviously, you need to certify its tax impact. What would be the tax impact? What would be the percentage of withholding tax? And so you are giving an opinion on two aspects. First of all, whether it is taxable in India, number one, under Section 9. So if it is taxable under Section 9, whether CCAA would be available, then you need to look into those CCAA and which is the applicable article will have to apply those and whether look into it, whether the benefit is available in GTAA. If there is no benefit available in GTAA, obviously and not GTAA, whichever is beneficial will be happening. That's a very important change which is happening. Practicing members, I know even from a compensated C15CB certificate from China accountants. So therefore, my request would be we need to each and every individual, whether it is a small time practitioner or if you go which you have any cross-border transactions that you need to issue those 15CB, we should be aware of the international taxes. So I'm just trying to brief on the basic things. You are aware that in case of royalty and the FTS, which we call technical services, we need to tax which has been increased from 10% to 20% recently by the last budget. Similarly, TCS has now been brought in on the foreign remittance, whether the amounts have been drawn under liberalized remittances beyond a particular limit. Even there is a TCS applicable on overseas route packages which has been increased also left. So there is a paradigm shift which is happening, and the focus of all the domestic tax laws is to tax such transactions which are in foreign remittance, which were intended to not be taxed. Therefore, bonus will not be a lot of chartered accountants who will be issuing 15CB or CS certificate. Another example which I could thought of is which I previously received. One second, I think so there's some confusion. But just hold on. Hello?
Then we were very pleased to have him, at least his online presence. Okay, so with this we are done with the technical sessions. Moving forward to the valedictory session. I would now like to invite CA Sachin Bansal, Chairman, Pimpri Chinchwad Branch, CA Pankaj Patni, Vice Chairman, Pimpri Chinchwad Branch, CA Sarika Chodia, Secretary, Pimpri Chinchwad Branch, CA Shailesh Bore, Treasurer, Pimpri Chinchwad Branch, and CA Vaibhav Modi, Vikasa Chairperson, on the dais for the valedictory session.
First of all, thanks given to all the participants. मुझे लगता है कि 2 दिन पार्टिसिपेंट ने जो यहाँ पे आप सभी आए, बियर विद अस, और जिस तरह से आपने इस कॉन्फ्रेंस को सुना, तो हम सभी के ओर से मैं चाहूंगा कि हम सभी आप सभी का हम धन्यवाद देना चाहेंगे. सो थैंक यू वेरी मच. To extend the thanks to Continuing Professional Education Committee of ICI to giving us the chance to take this 2 days conference. So I am thank you to all the committee members of the ICI and the managing committee member of WIRC for giving us the chance to take this 2 days national conference. Session 1 for yesterday and today, all our speakers, CA Advocate Ashwin Ji Taneja sir, Advocate Amit Khemka sir, Dr. Advocate CA Avinash Ji Poddar, CA Gopal Krishna Raju sir, CA Umesh Ji Sharma sir, Advocate Jatin Ji Harjai sir, then CA Naveen Khariwal Ji sir, Balwinder Singh Ji, और पीयूष जी छाजेर सर जो ऑनलाइन हमारे साथ अभी जुड़े थे, इन सभी का तहे दिल से धन्यवाद. साथ ही साथ आई वांट टू एक्सटेंड माय वोट ऑफ थैंक टू सीए चंद्रशेखर जी चित्रे सर, सेंट्रल काउंसिल मेंबर, जिन्होंने हमें यह कॉन्फ्रेंस कंडक्ट करने के लिए पूरा गाइडलाइन किया था. उनको भी धन्यवाद. किसी कारणवश वो आज आ नहीं पाए, लेकिन उन्हें भी तहे दिल से धन्यवाद. नाउ सब में इंपॉर्टेंट थैंक्स गिविंग जो है कि ये जो कॉन्फ्रेंस हम सक्सेसफुल कर सके, इसका जो बैकबोन है, जो पिछले 1 महीने से इस कॉन्फ्रेंस को सक्सेस करने के लिए दिन और रात मेहनत कर रहे थे, वो है हमारे ब्रांच का स्टाफ. तो मैं सभी हमारे ब्रांच के स्टाफ को रिक्वेस्ट करूंगा, कृपया स्टेज पे आए. जोरदार तालियों से हम उनका यहाँ पे स्वागत करेंगे, क्योंकि बिना उनके मेहनत के हम ये कॉन्फ्रेंस सक्सेसफुल. पूरी दिन रात मुझे याद है कि सभी किरण और विनोद तो परसों रात में 2 बजे तक ऑडिटोरियम में थे। इन सभी के बारे में कहना या यहाँ पे ऑडिटोरियम में कुछ भी काम हो तो 1 महीने से पूरा प्रिपरेशन ये करते हैं। तो थैंक यू वेरी मच टू ऑल द स्टाफ। सो वंस अगेन थैंक यू वेरी मच। नेक्स्ट जो है थैंक्स गिविंग कि पैसों के बगैर कुछ काम नहीं हो सकता है। तो जो स्पॉन्सरशिप हमें मिली थी उन सभी स्पॉन्सर का हम यहाँ पे तहे दिल से धन्यवाद करना चाहेंगे और यहाँ पे उनका हम यहाँ पे एक छोटा सा मोमेंटो दे के सभी हमारे जो स्पॉन्सरर है उनका हम यहाँ पे हमारा जो थैंक्स है वो देना चाहेंगे। तो सब में पहले मैं बुलाना चाहूंगा सूर्या इलेक्ट्रॉनिक्स की ओर से अगर कोई यहाँ पे है, एनीबॉडी फ्रॉम सूर्या इलेक्ट्रॉनिक्स। उसका में टैक्समैन की ओर से अगर कोई है यहाँ पे, देन वासु वड़ा पाव सेंटर, कुंदन हुंडई वाले, देन मित्तल ग्रुप, वसंत ग्रुप, कोहिनूर ग्रुप और रेरा कनेक्ट। So Rena Connect के ओर से वैभव द रिप्रेजेंटेटिव फ्रॉम द वैभव रेरा कनेक्ट। सो टैक्समैन, देन वासु वड़ा पाव से एनीबॉडी फ्रॉम Then I want to extend my hearty vote of thanks to our event management team, that is Asha Agarwal and team, West End event. लास्ट 4-5 डेज से पूरे दिन वो यहाँ पे है। तो थैंक यू वेरी मच। ये जो पूरा यहाँ का जो भी आप एम्बियंस देख रहे हैं, ये पूरा पीछे का डेकोरेशन एंड एवरीथिंग इज डन बाय देम। सो रियली थैंक यू वेरी मच। लास्ट 3-4 डेज से पूरी दैट इज द डिवोशन फ्रॉम देम। सो थैंक यू वेरी मच। और जिनके सुरीली आवाज के साथ एंकरिंग जिन्होंने किया, डे 2 से पूरा प्रोग्राम जो था हमारा टेबल प्लान के साथ उन्हें याद हुआ था और जो कुछ भी शफल चेंजेस हुए उन्होंने बड़ी ही खूबसूरती के साथ उसको ये किया। सो थैंक यू वेरी मच। सो रितु थैंक यू एंड आई रिक्वेस्ट यू। और पूरा कोई भी कार्यक्रम सक्सेसफुल जैसा पार्टिसिपेंट और स्पीकर के साथ साथ एक चीज होती है कि 2 दिन का जो खाना होता है वो बहुत महत्वपूर्ण होता है। अगर खाना अच्छा है तो प्रोग्राम सक्सेसफुल होता है। तो हमारे जो केटरिंग वाले थे ओम केटरिंग, ओम प्रकाश जी, उनका भी हम यहाँ पे तहे दिल से धन्यवाद करना चाहेंगे। वो अभी यहाँ पे उपस्थित नहीं है, उनका भी तहे दिल से धन्यवाद। साथ ही साथ हमारे ट्रैवल कंपनी सुरवे ड्राइव, उनको भी बहुत तहे दिल से धन्यवाद। हमारे पूरे जो स्पीकर थे उनका ट्रैवलिंग अरेंजमेंट उनके ओर से किया गया। देन आई ऑल्सो एक्सटेंड माई वोट ऑफ थैंक्स टू रेखा पिक्टिट, जो ब्रांडिंग हमारा किया है, ज्ञान कृष्णा एंड एवरीथिंग इज डिजाइन बाय हर। सो थैंक यू वेरी मच। देन 7 स्टार वैलेट, कल जो पार्किंग का हमें इश्यू आया था तो 7 स्टार वैले पार्किंग वालों ने हमें बहुत कोऑपरेशन किया। सो थैंक यू वेरी मच। नाउ आई वांट टू एक्सटेंड द वोट ऑफ थैंक्स कि जिन्होंने हमें गाइड किया पूरी इस कॉन्फ्रेंस के लिए। सो हमारे जो पास्ट आरसीएम हैं सीए डॉक्टर अशोक कुमार पगारिया जी, उनका भी हम तहे दिल से धन्यवाद करना चाहेंगे। उनका मार्गदर्शन हमें वक्त पर मिलता है और लास्ट 2 दिन से वो यहाँ पे ही है। तो ये भी देख रहे हैं कि भैया सब सही चल रहा है या नहीं चल रहा है। अगर कहीं पे गलत हुआ तो उनका मार्गदर्शन हमें यहाँ मिलता है। सो थैंक यू वेरी मच सर।
सही चल रहा है
सर, आप अगर आ जाए तो बहुत अच्छा लगेगा स्टेज पे। यस। साथ ही पमरानी, सीए विनोद जी इनामदार, जिन्होंने कल जो म्यूजिकल प्रोग्राम भी इनामदार सर ने किया, उन्हें भी तहे दिल से धन्यवाद। देन सीए मनोज कुमार अग्रवाल, सीए बबन डांगले, सीए प्रसाद जी सराफ, सीए सुहास जी गांधी, सीए अमोद भाटे, रविंद्र जी निर्लेकर, श्री संतोष संचेती जी ने हमें बहुत हेल्प की इस पूरे कॉन्फ्रेंस में. सो थैंक यू वेरी मच संतोष जी. देन सीए सिमरन ललवानी एंड सीए चंद्रकांत जी काले, सीए सुनील कारबारी, सभी का तहे दिल से धन्यवाद. इनका जो एक्सपीरियंस था ये हमें बहुत इस वक्त नेशनल कॉन्फ्रेंस लेने में काम में आया. सो थैंक यू वेरी मच. देन हमारे जो सब कमेटी में जो महत्वपूर्ण काम और हेल्प की, तो हमारे जो फूड कमेटी के जो 2 मेंबर्स थे जिनके वजह से पूरा मेनू केटरिंग किसे केटरिंग का कॉन्ट्रैक्ट, लाल जी शिंगे सर, उनसे निवेदन करूंगा वो कृपया स्टेज पे आए. साथ ही साथ श्री महावीर जी कोठारी और श्री संतोष जी संचेती. देन आई रिक्वेस्ट सीए कुंतीलाल जी शिंगे सर, देन महावीर कोठारी और संतोष जी संचेती. किरण देन आई रिक्वेस्ट महावीर कोठारी दिया, उनका भी तहे दिल से धन्यवाद. देन पंकज जी अग्रवाल जिन्होंने हमें सभी गिफ्ट जो हमने दिए उसके लिए स्पॉन्सरशिप दी, उनके लिए धन्यवाद. और ये जो कुछ भी मोमेंटो बना है वो वांट टू एक्सटेंड आवर वोट ऑफ थैंक्स टू ऑडिटोरियम एंड ऑडिटोरियम स्टाफ एंड पिंपरी चिंचवड म्युनिसिपल कॉर्पोरेशन कि जिन्होंने हमें इतना अच्छा ये ऑडिटोरियम अवेलेबल करके दिया. और 2 दिन में पूरे जो कुछ भी फैसिलिटी जो चाहिए थी, इलेक्ट्रिसिटी, वाटर, एवरीथिंग इज प्रोवाइडेड बाय देम. सो वी एक्सटेंड द वोट ऑफ थैंक्स टू अतुल जी काले एंड साउंड एंड लाइट टीम ऑफ द ऑडिटोरियम. सो थैंक यू वेरी मच. नाउ सचिन बंसल वांट टू शेयर समथिंग.
I would like to thank all my management committee members because without them this program would not have been successful. So I would like to call them and felicitate the management committee members also. So firstly, CA Pankaj Patni, Vice Chairman. So he will be felicitated by Pagaria ji. Next, CA Sarika Chodia, Secretary. Next, CA Vaibhav Modi, she will be felicitated by Mahavir Kothari. CA Shailesh Modi.
हम सब मैनेजिंग कमेटी के ओर से हम उनका सत्कार करना चाहेंगे छोटे से मोमेंट को देके. सो सचिन जी बंसल हम सभी के ओर से तो कैप्टन ऑफ द शिप.
Congratulations to Sachin Bansal and all his team members, subcommittee members, sponsors and everybody. Special thanks. Okay.